I'm going to tell you why I sold all my real estate for this one poorly understood investment and how that decision changed my life. By the end of this video, you're either going to think I'm crazy, maybe a little bit of a genius, and you might just want to try it for yourself. In 2021, I did this thing that seemed insane to everyone around me. I started selling my entire real estate portfolio. This was a multi-million-dollar portfolio of cash-flowing, single-family homes, commercial office buildings, and mortgage notes, all with solid tenants, all paying, all making me money. My real estate friends thought I had completely lost it. After all, isn't real estate the backbone of wealth building? That's what I thought too, and that's how I positioned myself for more than a decade. But I discovered something that changed everything for me. It's not just about making money, but about how infrastructure and energy are going to reshape the way that wealth works in the digital age. And I'm going to show you what most investors today are missing. First, you need to understand something about my background. I graduated with a degree in engineering management and information systems. I'm trained to see systems, spot inefficiencies, and solve complex problems in order to create maximum value. That engineering mindset helped me build what looked like a successful real estate portfolio. I had everything systematized: property acquisition teams so I could find the best deals, tenant screening protocols, maintenance schedules and property management, cash flow projections, deal financing. Everything was set up for me. I thought that I had cracked the code for passive income. I was wrong. Let me show you what a successful real estate portfolio actually looks like. I had a property in Texas that looked something like this. $200,000 property, $2,000 a month monthly rent, minus a $1,200 mortgage, minus $200 of property tax, minus $100 in insurance, $200 as a maintenance reserve, $200 for a property manager, and at the end of all of that, you've got $100 a month of cash flow. That's right, $100 a month on a $200,000 investment. And that's when everything went perfectly. But real estate's never perfect. I had multiple occasions where 1 year or multiple years of rental profits were completely erased by a $7,500 HVAC system going bad, or a tenant mistreating the property so badly that the upfront deposit and the maintenance reserves that I kept didn't cover the damage. Add to that the fact that during COVID, you couldn't legally evict anybody even when they stopped paying you, and you suddenly have an investment that loses you money and costs you time. As an engineer, something kept bothering me about trying to scale my real estate empire. The numbers didn't add up. The efficiency wasn't there, the scalability was limited, and I couldn't see how I was going to achieve my goals like this. I knew that there had to be a better way. So this goes into my journey into making recurring income from digital assets. I started back in 2015. While I was successfully managing properties, I tried an experiment: Bitcoin mining. Like any good engineer, I started small, investing with a tiny mining operation in Sweden. Well, within 3 months, they disappeared with everybody's money, and I got back about half of what I put in. But this is what's interesting. Even after losing that investment, I couldn't shake the feeling that this technology was something massive. The engineer in me saw the potential for programmatic income generation, no human tenants, mathematically modeled returns, and converting energy directly into money with no counterparty risk. But this is what really got me thinking. I was calculating my actual hourly rate for passive real estate income. For it being passive real estate, I was spending more than a full-time job's worth of hours to run this thing and grow it. And that's when my engineering brain kicked into overdrive. I spent thousands of hours studying Bitcoin, energy infrastructure, and everything to do with it while everybody else is focused on price speculation in the crypto markets. But I saw something different. The world that we live in isn't just going digital, it's going to need entirely new infrastructure. There's AWS and a few other hyperscaler data centers that basically run our entire world. Data centers are handily outperforming office buildings and other types of real estate. Computing power is becoming the new prime resource as AI spreads like wildfire. And most importantly, energy is the critical resource to pay attention to that makes all of this possible. So in 2021, I made an even bigger move. I invested $500,000 of my money into mining equipment, and I found what seemed to be like a great hosting partner to run it. I thought I had solved it and that I could be booking vacations the following month with $35,000 a month of passive income. Unfortunately, that year nearly broke me. I followed bad advice, got the wrong equipment, chose the wrong partner, and took the wrong approach. As of today, that was essentially a total loss, the worst year of my life in business, and that operator is now in bankruptcy due to a poorly managed operation. But Again, as an engineer, I did what engineers do. I documented all the failure points, which were power cost variability, equipment selection, maintenance issues, cooling inefficiencies, management gaps, and bad communication and service to the most important person in any business relationship, the customer. Every one of those problems became the blueprint for what I would build next. Today, our facility in Oregon represents everything that I wished existed when I started in this business. We have fixed-rate hydroelectric power that's locked in for years and comes with energy management incentives. We also have the most ideal climate that you could imagine for running a mining data center. It's currently filled with the latest generation of S21 miners that turn energy into money more efficiently than almost anybody. We have hundreds of units owned by happy customers who rave about us for our full service management. We have highly professional and highly skilled 24/7 management and operations team with better than 98% uptime and all-inclusive repairs since we've been operating. We also have the advantages of a sales tax-free state living in Oregon. And because of the way that we design the facility, we have the ability to move locations if we're ever put into a hard position. And on top of that, I have a team that I love to work with, aligned on a much more powerful mission than just dealing with ungrateful tenants. And now, instead of managing properties that are scattered across the country, everything's in one climate-controlled facility, producing Bitcoin every single day. So let's break this down in real numbers with real equipment that's available now. Today, a single S21 Pro 234 terahash miner with the first year of power costs included in our facility costs about $10,000. It'll make you about 0.062 Bitcoin per year, which is about $5,500 in year one at today's price of $90,000 Bitcoin. That means if Bitcoin went into the $160,000 range per coin, or almost a 2x from here, your investment is fully paid off within the year, and you have a free high-performance machine that makes Bitcoin. By the way, this is not financial advice, but in the last 2 Bitcoin price cycles, we've had a 6x and a 25x from where we sit today to the price that's 12 months from now. Now, I'm not making any predictions, but you can just watch what I'm doing with my personal money. Even if everything stayed level to how it is today, mining is usually paying for itself within 2 to 3 years. And then it's going to keep running for years later. I haven't even started to get into the tax advantages that come with mining, rather than just buying Bitcoin itself. But let's just say computer equipment can be depreciated on a very short time frame, and you can fully write off your operating expenses against your income, which is something you can't do if you just buy Bitcoin on the open market. If we compare all of that to a $200,000 rental property making $500 a month, if you're lucky, real estate investors are usually thrilled with 8 to 12% compounding. But do you realize that that barely outperforms inflation, if at all? And here's what really matters. It's not just about better returns. As an engineer, what excites me most is how we get to reshape energy through digital infrastructure. In our facilities specifically, we are converting wasted energy capacity into productive use and helping our communities. We're stabilizing power grids as a flexible load and creating true energy independence for communities across the Pacific Northwest. By building this digital infrastructure that will power the future in Bitcoin mining and every other type of computing resource, we're reshaping the landscape and reshaping economies. So listen, if you're sitting there looking for your next property deal, I know how this sounds. I was skeptical too. I was a longtime real estate investor, and I made the mistake so that you don't have to. Which is why when people reach out to me, I start every conversation by understanding your specific situation and goals with this. It's not a one-size-fits-all, and it isn't a fit for everybody. We don't take every client who wants to work with us, but if you want to book a call with my team and see about getting some of the limited space in our data centers, you can follow Abundant Minds on Instagram, Twitter, or YouTube, and message us passive to get set up for a call. You can also find a call booking link directly on our website at abundantminds.com. I know this may not be something that you feel like an expert in yet. I personally believe it'll look like one of the worst mistakes 10 years from now to ignore this income strategy altogether. Whether you're looking to allocate $25,000, $500,000, or several $1 million to optimize your personal passive income strategy, we'll find the best fit to position you personally in this new and evolving landscape. The window of opportunity is here. You can get ahead of the people not paying attention, and we can build something meaningful together. Until next time, like, subscribe, leave a comment with what was most helpful to you, and be sure to check out the other content that we're producing. Thank you so much.